And the renewable energy sector's matured immensely in the last decade and confidently stands on its own 2 feet. What we need from policymakers now is certainty of the direction of travel, that we can continue to make the long-term investments needed to deliver a low-carbon economy.
Hello, you're watching Proactive. I'm joined by Ross Driver, Fund Manager of the Foresight Solar Fund. Ross, very good to speak with you. The government's investment summit took place on Monday, and the government seems committed to creating a positive environment for private investment. Are you seeing that in conversations as well?
Oh, hi, Stephen. Yeah. Well, I think looking at it, when the new government took office, they've been rolling out this hard medicine narrative that was a bit arguably overdone. And they're now having to work hard to bring the public and private sectors together and unlock that necessary investment for the UK to return to growth. I'd say there's plenty of private capital here on the sidelines, waiting for a more stable environment to invest. And the UK has one of the most developed capital markets in the world. There's trustworthy institutions and credible courts. It is an appealing combination if we have that stability. We're hearing from investors all over the place that they need demonstrations of stable policy environment to get them back into deploying money. So this week's investment summit is a good example of how to get that started. But I say now let's see if they take that into consideration, businesses' feedback, and actually show their commitment when the Chancellor announces the budget later this month.
Ross, the government's also made shows of support for the renewable energy industry. What would the sector like to see from policymakers?
I'd say the rhetoric has been positive for the renewable industry so far. I mean, to date, the government's approved several nationally significant solar projects. They revised the budget for this year's contracts for differences in the renewables auction. And there is proposed changes to the planning regime, which is all very positive, we think, for deployment of solar here in the UK. They're all steps in the right direction to unlock the necessary solar and wind energy capacity needed to transform the UK economy. We must not, however, forget the basics, and a reliable energy system is built on a balanced electricity grid. With the support of a private and public investment, we'd like to see the government implement the recommendations of the Windsor report and scrap the first come, first serve model in grid connections, which we feel has resulted in many zombie plans and plants blocking viable renewable projects coming through for decades. It's taking so long for viable new projects to get into the grid queue at the moment and get pushed forward. So the renewable energy investment trusts, of which we are one, are some of the biggest backers of solar and wind infrastructure in the UK, with almost 20 billion deployed to date. And that needs to be consistent. As infrastructure investors, I'd say we would gladly trade away some of that upside in return for less volatility. And that's what we'd like to see from the government, is longer term clarity on the policy making direction.
Ross, it's been a challenging macroeconomic environment for the last 24 months. Is that changing, and how does the government support play a role in that?
Well, certainly, no, it is absolutely the case. And the high inflationary environment of the last couple of years has led to record interest rates around the world, and that's posed a challenge for investment in renewables. In the last few months, we have started to see some indications of those macro factors maybe changing. Interest rates have been coming down and energy prices have become less volatile. We've been looking to position ourselves in a strong place for when the market changes, with our debt repayments and our share buyback the largest in the sector relative to NAV. We've strengthened our balance sheet, we've returned capital to investors, and at current prices, our shares are yielding almost a 9%, plus the growth that we're looking to give on top of that. So things have been moving in the right direction. I think if there's one concern, it's looking at the gilt rates over the last month, coming through to now as we've just seen this investment summit. I think the markets are slightly worried here about how much additional borrowing or debt the government may be looking to take on. We've seen the gilt rates rise by about a further 50 bips in the last month alone, which is not helpful. And if anything, the gilt rates are now going back in the wrong direction. So I think some clarity that they're not going to be maxing out borrowing capacity or the credit card from the new government will be helpful. But we're also looking ahead. We're building a proprietary development pipeline that can deliver growth in addition to the income from our progressive dividend. And the renewable energy sector's matured immensely in the last decade and confidently stands on its own 2 feet. What we need from policymakers now is certainty of the direction of travel, that we can continue to make the long-term investments needed to deliver a low-carbon economy.
Ross, as always, thank you very much for your insights.
Thank you, Stephen.
That's Ross Driver, Fund Manager of the Foresight Solar Fund.